Hey guys, welcome back. I figured that I would give you a quick update on Sofi before the weekend. Sofi right now is in a very interesting but difficult spot because there are four different catalysts that kind of counteract each other. So I've been dealing with this one for a couple weeks now. It's been going up non-stop almost. But now we have to really think about where it's going in the next month. So let's get started. I'm going to show you like what I'm looking at and what I've been doing with my shares. Alright guys, let's go over the four different catalysts for SoFi and how it's going to probably play out. First, you have the price target by the different analysts. This has really helped over the past month go from a downtrend and then it started to stabilize and then it started to go on an uptrend. Then you also have the earnings coming up. That's another big catalyst. If you guys remember, in the second quarter, there was a nice run up towards the earnings for SoFi and then it actually crashed after the earnings. However, if you guys remember, the second quarter earnings for SoFi were a little bit different because they had the liabilities from the warrants and there were also the new guidance that he had to give for the student loan refinancing, right? So this might not have as much of an impact this time around as it did in Q2. Third, we have the warrants that became exercisable earlier this month. So far, the market doesn't really care, apparently, right? But very soon, it is very likely that the company is going to call them due, right? Force redemption. And if what happened in other companies stand true, you know, we saw this with Lucid, with a lot of different other companies. Well, when they announced the force redemption for the warrants, the price tends to go down. This is kind of like what I've been holding out for in the past couple of weeks, right? So even though the stock was recovering, I didn't really believe it as much, right? Because I knew that the warrants were coming. So we'll look at that in a second. And then fourth, the biggest catalyst of them all is the company going to get the bank charter? All right, so let's go over them one by one. First, you have the analyst ratings. This is very crucial. That's what has helped the stock recover. So you have $28 and $25. This was at the end of September, and you can clearly see down here, right? You saw the little uptick, then it dipped, and then it really started to go on an uptrend after that. When the Jeffries guy actually gave a $25 rating. So this is a 5-star analyst. It brings a little bit more weight and attention to the stock. Then you have Morgan Stanley that gave it also a $25 price target. And we continued right here. Look at how it really kickstarted that ascension for the stock. So that is one of the big positive catalysts. The only problem is that, in my opinion, this tends to be a little bit more momentum based, right? It's more temporary. When they get a good analyst rating, it actually sometimes can help the stock because it gives the go ahead, the green light for some of the bigger players, the bigger hedge funds to invest in the stock. But I feel like it can't by itself support the stock. It's not enough to like protect the stock against the market going down or some of the other catalysts that are a little bit more negative that I'm going to show you now. All right, second big catalyst in next month, and this one I'm putting it more neutral, is going to be the Q3 earnings on November 10th. The reason why I can't put them in the positive category is that I don't really have a great feeling about it. We have had a very aggressive run up in the past month, right? It went from about $15 to over $20, and this is not the first time we saw that. Of course, it is very positive that we had the positive analyst ratings. That has boosted the stock, but at the same time, there is this cohort of retail investors that tend to bet on the earnings and profiting from the positive momentum it's had. There are a lot of people in there that are more momentum chasers. They're not really long-term investors, and if the earnings like don't live up to expectations, they're going to get out of there as fast as possible. We saw the same thing happen in Q2 at a smaller level. Look at how the stock had stabilized at 15, then it ran up to 1750, like right at the Q2 earnings, and then when it didn't live up to expectations because of the new guidance on the student loans and also the warrants liability that not a lot of people really understood, well, the stock fell off a cliff to a new all-time low. All right, so that's kind of what I expect is going to happen, not to the same degree. I'm not going to say that the stock is going to drop to 13 bucks or anything like that. Nowhere near that. But I wouldn't necessarily consider this a positive. I don't really think that we're going to have the earnings and then the stock is going to spike to 25. Of course, I hope I'm wrong, but I'm assuming that it's not going to happen. A couple reasons for that, especially, is that the housing market has been slowing down. I read a couple reports that the number of originations is lower than it was before. There's less refinancing and all of that, and that is going to have an impact on SoFi's results. The company is still going to be growing, but this quarter it might have grown a little bit less. If you look at their revenues, lending is still by far right here 172 million, 172 million last quarter, is still by far their biggest category of revenues. Now the breakdown is a little bit different, right? It's hard to tell exactly how much it's going to affect them, because they actually do more personal loans. Last quarter it was 1.3 billion versus home loans at 800 million. Right? So how is that breakdown going to be affected this quarter? It's hard to tell. I have a feeling like their personal loans, which is what they've been focusing on the most, I have a feeling like this is going to probably grow a lot faster than the actual home loan originations. And we already know that the student loans might actually be lower again this quarter. Right? So that's why I am a little bit skeptical about the earnings. I don't see the stock like skyrocketing at the earnings. So November 10th is going to be a very important catalyst for us. All right, catalyst number 3, we've got the warrants that are probably going to be redeemed fairly soon. This is going to probably put a lot of negative pressure on the stock price. So for those of you not as familiar, I know there's been so many different questions about the SoFi warrants. I'm going to link this document in the description. You guys can read it. It's going to answer all of your questions about the warrants, but the gist of it, like if I am to like really sum it up, is that starting on October 14th, the warrants became exercisable, meaning you could trade your warrants for shares, and that caused some dilution. However, the market has not really cared about this so far, right? But what tends to really have a bigger impact is when the company forces redemption. Everyone knows that this is a dilution event, right? And for SoFi, they have two different scenarios where this can happen: above $10 and above $18. So I don't exactly know which one they're going to go with. They have different timelines, which you'll be able to read in the document. Now, if they want to do the above 18, right, which has a different calculation for the ratio of shares that you're going to get, they would have to wait until the stock has been above $18 for 20 days out of 30, and that has just begun recently. So that could delay it if this is what they want to do. However, if they want to do it above $10, right, a different calculation, that's when you want to refer yourself to, that table that lists at every strike price, like how much shares you would be getting, right? And document in the prospectus, you're going to find that. Well, they can do this at any time right now. The clock has already started when the warrants became exercisable. So why do we pay attention to this? Well, different stocks have felt a lot of selling pressure when the warrants have been called by the company. This is Proterra. The company had struggled for a long time, but look at how it was fairly stable. It had even recovered a little bit in September when they announced the redemption of the warrants, and since then it actually went way below that, and it actually went under $10. Now it doesn't always play out the same way. With Lucid, there was kind of like a flash crash almost with the share price, where you don't see it very well, but the share price actually went down to $16 very briefly, and this was pretty much the best time to buy Lucid under $20 when they announced the redemption, because it rebounded right after that. And since then, anyone that bought at 16 would have had a fairly good gain with Lucid. So that is kind of what I'm looking for. Like, for me, it's a positive catalyst because I want to buy more shares, but overall, it's a negative catalyst, most likely, when it comes to the share price itself. I view that as the last great opportunity to buy SoFi. For me, that is the last catalyst that I'm looking for to actually buy shares. Hopefully it actually drops. Now, the big difference is that when the stock was stuck at like 17 and 18, I thought that this catalyst that is negative, when they called the warrants due, I thought this could actually bring us back to 15. Right? I was really willing to load up on shares. Now that the stock price is at 20 plus, well, that's the big thing, right? Is that if the earnings are okay, if they call the warrants due, they might come down to 17, 18, right? It's very unlikely that we'll go all the way back down to 15 or 13 again. So, it's kind of like a mixed bag, right? It might be a buying opportunity again, but not as great as it could have been. So this leads us to the last part of the video, the fourth catalyst, the biggest one, which could be a game changer for the stock, either going up or down, is of course, for those of you that have been following the stock for a long time, it is the bank charter. I mean, this one is going to be a game changer. Currently, when you're dealing with Sofi, they take your money, but they can't really hold it themselves. They have to transfer it to a third-party bank, and that really limits what they can do. If they can get the bank charter, it's going to be a completely different story. They're going to be able to get money from their customers, actually hold it and lend it out about 10 times. So their lending rates are going to improve, their margin is going to improve, everything about the company is going to be better, and that's why the buy ratings have been coming from the analysts. Most people expect that they are going to be getting this bank charter, right, by the end of 2021. But what if they don't? Because they've been working on this for over a year now. So recently, if you guys remember, they had bought Golden Pacific Bancorp, and the goal here was to kind of like sneak their way in. Since they already had a bank now, they would be able to get the bank charter a little bit easier. Well, this guy, Rick Fowler from Golden Pacific Bancorp, is trying to stop this transaction. He says that he didn't get the full value for his shares, and he's trying to have the transaction unwound. Now, I'm not an expert on legal things, right? So I can't give you my opinion on that. Are they going to be able to, is he going to be successful? How long is it going to delay the transaction? I don't know. What I'm really hoping is that they're going to be addressing it in the Q3 earnings call, right? They're going to give us an update on maybe a timeline. That's what we need right now. But while this is all going on, this really puts a lot of like a looming pressure on the stock. So this keeps the price down artificially, in my opinion. Now, where does this all lead us? We have some positives with a lot of traction for the stock, even though it's down a little bit today, right? But overall, analysts are starting to love it. Wall Street is starting to love it. And we all think that the stock is going to do great long term. In the short term, though, if we look at the next month, I'm seeing some potential problems here that will maybe push the price down, kind of. And that would be the last great opportunity to really load up on shares and build a position. So personally, I have some shares right now. The position is lower than I want it to be. And what I was doing is selling covered calls. Remember, this is my strategy. When the market was down, I was doing pretty well because of the options I'm selling. The issue here is that I kind of got caught with my pants down on this one. I was selling covered calls at $17, and now the stock price is over 20. So I am deep underwater in my covered calls. So for those of you that are in the same situation, right, you don't want to panic. You have to anticipate where's the price going from in the next month. So since I think the price is going to come down, instead of trying to really roll up my position to $18, $19, right, and really have to roll it out a couple months because the premium isn't that good, I'm just going to be rolling out from 1 week to the next and seeing how this current situation plays out. So I had options ending today, expiring today at 17. I transfer them to $17 next week, and that gives me 5 more days to see what happens with the stock. And if it keeps going down, let's say it goes back down to 17 or 18, then I'm going to be fine. I'm going to be able to close a position or sell new ones at a higher strike price. So I hope this helps you, right? I covered the 4 different catalysts that are coming up in the next month, most likely. And, now you have the full picture. So I'll see you guys in the next video.